Euro dollar. So an impressive bearish outside day in the euro on Friday after the market stalled out by some key internal range resistance at the 1467 area. At this point, the bearish outside day sets the stage for a resumption of declines in this market back down towards next key support in the form of the 110.87 low that we saw back on September the 3rd. At this point, only a close back above 115 would take the pressure off the downside. Sterling dollar. So Gable gains have stalled out with the market rallying all the way up to an impressive 156.59 ahead of the latest minor pullback. At this point, the rally now is classified as corrective, and the setbacks that we saw on Friday could set the stage for a fresh lower top and bearish resumption back down towards recent lows at 151.65. At this point, only a breaking close back above last Friday's 156.59 high would take the pressure off the downside. Dollar yen. So dollar yen continues to consolidate off that recent collapse that we saw several days back in late August, and the market looks to be putting in a lower top at 121.74 ahead of a bearish continuation back down towards and eventually below that August 24th 116.12 low. At this point, only a break back above 121.74 would compromise the newly adopted bearish outlook. Euro Swiss. So Euro Swiss hasn't been doing much over the past several sessions, though the market does retain its recovery outlook, and the outlook now favors fresh upside towards the next measured move in the form of the 112 area. At this point, only a break back below the recent low that we saw at 107.14 would take the pressure off the top side. Aussie dollar. So Aussie dollar looks like it's poised for a bearish resumption after the market put in an impressive rally in recent sessions out from those multi-year lows that we saw. At this point, look for a return to those recent multi-year lows and a breakdown towards the next key objective in the form of a 68.30 measured move extension. Only back above 74.40 here would compromise the bearish outlook. Dollar CAD. So dollar CAD retains its impressive bullish recovery outlook with the market locked within a well-defined uptrend. At this point, setbacks continue to be very well supported, and fresh upside is now seen towards the next psychological barrier at 135. 133.54 is the current 11-year high, which was set going back to the August month, and only at this point back below 128.60 would compromise the bullish outlook. Kiwi dollar. So Kiwi remains locked within a well-defined downtrend, and the market is looking for the next lower top ahead of a bearish resumption back towards and eventually below those recent multi-year lows at 61.30. At this point, only back above 67.40 would compromise the bearish outlook. SPX 500. So the S&P 500 continues to look quite bearish and toppish after the market broke down several days back. At this point, a lower top is now sought out by last Thursday's extreme high at 2022, and fresh downside is favored back towards the recent lows that we saw down towards 1800. Really, only a break back above 2022 would compromise the newly adopted bearish outlook. Gold. So gold has put in an impressive recovery in recent trade, and the market now looks like it's putting in a higher low above that recent multi-year low at 1073, a higher low in the 1100 area, to be confirmed on a break back above 1170, which would expose a retest of 1233 further up. At this point, only a close back below 1100 would compromise the newly adopted bullish outlook for gold.